Hello dear traders, I'm Maria Stradop and this is the review of crypto analytics from fx.co. It's the 10th of February today, Friday, and in our today's review, Bitcoin drops below 23,000 level, and what does Google have to do with this? Meanwhile, the UK is preparing for tougher regulation of cryptocurrency companies. Okay, let's start. We will start with an article by Artem Petrenko and Bitcoin. So, the article was written yesterday, and Bitcoin continues to consolidate within the 22.8, 23.4 thousand area. And according to Artem, the cryptocurrency still has bullish potential, but reacts extremely sharply to external events. A key role in this is played by stock indices, which maintain a high level of correlation with the asset. And in the current trading week, Bitcoin was very close to start off a corrective movement with a potential of 21,600, 22,400. However, according to the results of Tuesday, buyers finally managed to neutralize the advantage of the bears. However, the next 2 days led to another increase in bearish volumes. Bitcoin ended the day before that day, near 22,600. And as of yesterday, it has finally broken through the 22,800 support level. What was the reason? Among the key catalysts for the cryptocurrencies downward spurt are the stock market and the situation with Google shares. Users have reportedly found a factual bug in Google's artificial intelligence technology, and this provoked the fall of Google's shares and a sharp drop of S&P 500. The S&P tested the 4,000 level and struggled to stay above it. The wave of volatility hit the crypto market due to the high level of correlation between them. And the only difference is that the consequences for Bitcoin may be more unpleasant than for stock indices. However, do not assume, Artem says, that the local stock market crash will not escalate into a large-scale correction. Analysts at Goldman Sachs report that companies in the S&P index continue to approve buybacks for 2023 at a record pace, which is a key part of the bullish trend in asset. As for Bitcoin's technical picture, despite all the movements in the global economy and the stock market, Bitcoin continues to be in demand. Sentiment reports that Bitcoin outflows from exchanges continue, and cryptocurrency reserves on platforms have reached their lowest level since November 2018. At the same time, sentiment reports that the expectations of a rally in January for the crowd are gradually replaced by skepticism in February. So, if you look at the chart, as of yesterday, Bitcoin was trading below the 22,800 level, which is an important springboard for a bullish move. And if the asset fails to recover above this level at the end of the day, we can expect a further fall to the 22,400 level. We'll shortly see this on the chart for the moment, a little later. Meanwhile, technical metrics continue to decline. RSI and stochastic are gradually moving to the lower part of the bullish zone. And on the chart, we can see the lower wick continues to form and grow, indicating that buyers are becoming more active. This reduces the probability of 22,400 retest, but we are not yet seeing a massive pullback. Bitcoin price fails to consolidate above 22,800 level, it will continue to decline to 22,400 and lower to 22,000. Okay, let's have a look at the chart for the moment. And what do we see? Yes, Bitcoin didn't manage to hold that very level. It yesterday in the second half of the day it went sharply down. In the beginning of yesterday it was about 22,600, 700, and then it went down and broke 22,000 level. It already opened today, 10th of February, at the point 21,857, and now it is trading at 21,859. So it looks like the second scenario, the second variant. It went down, it broke, it didn't manage to hold that very important 22,800 level, and then it broke through one more important level, 22,400 and even 22,000. So what's gonna happen next, whether it will be declining further or not, we will see. And now let's move to another article by Jakub Novak and some news first from the UK. And UK is preparing for tougher regulation of cryptocurrency companies. Now the government is making every effort to curb risky business practices in the wake of what happened with FTX. And thus the government has put out several proposals to bring the regulation of crypto asset businesses into line with that of traditional financial firms. One of the suggestions would be to reinforce the laws governing financial intermediaries and businesses that store cryptocurrency on behalf of customers in their wallets. The expansion of dangerous loans made by cryptocurrency companies to another on the security of their assets was another significant concern that influenced the regulators' views on the overgrowth and caused FTX to collapse when serious issues in the industry started to emerge. And the whole cryptocurrency market was impacted and its structure was severely harmed by the lack of due diligence of the counterparts involved in these transactions. So the UK's proposals aim to restrict such activity while strengthening consumer safety and business viability. They want to establish the world's first trustworthy regulatory body to oversee the laws governing lending to crypto assets. And also the British regulators' plans call for more stringent transparency standards for cryptocurrency exchanges, which will ensure accurate disclosure of data about these business operations. Okay, and now let's say a couple of words about Ethereum in the same article, and let's have a look at the chart. So Jakub says that the collapse of the nearest resistance level of 1670 is what ether buyers are concentrating on. This is going to be sufficient to establish a foothold at the current highs and keep the bullish trend going. The market will undergo considerable adjustment as a result of this, and the balance will be returned to offer upon consolidation above this level, with the possibility of an increase to a maximum of 1758, where longer-term targets will be at 1819. However, if the pressure on the trading instrument resumes, the next will be the mark 1594, which is just below where 1504 is shown. If it succeeds, the trading instrument will rise to a minimum of 1410 and even 1320. Okay, let's have a look at the chart for the moment. And again, we see a similar to Bitcoin picture. Yesterday, Ethereum declined sharply in the second half of the day. In the first half of the day, it was about 1630.40. Then it started to decline. It broke through 1600 and even lower. It opened today at 1550, and now it is trading at 1546. So again, this is the second scenario when Ethereum didn't manage to rise to hold the important 1670 level. It went down. It broke through the important mark 1594. However, it hasn't reached another important mark 1504. Whether it will reach it or not, we will see, we will learn in our next review. And we will see each other after the weekend on Monday. As usual, I wish you a successful weekend, a good rest, and successful trading as well. See you next time. Goodbye.